What's going on, everybody? It's Rod with POW Group. Welcome back on The Pursuit of Wealth, your home for MJ Stocks, crypto assets, news, and interviews. Today's Wednesday, May 7th. Happy hump day, and I hope you're well. In this video, we're going to review Trulieve's Q1 2025 earnings, and then toward the end, we'll take a look at the chart. I'll give my thoughts and opinions on the price action in the days, weeks, months ahead. But as always, this is not financial advice. This is for entertainment purposes only. Before we get to it, make sure to smash the like, help support me in the channel. And if you're new, you can subscribe, tick the bell, and you'll be notified on any future videos or when I go live. You can also follow us over on X, formerly Twitter. Handle for that is @GroupPow. Going to be using that as my platform of choice going forward. So they did have a beat and a miss. In terms of revenue, they did beat at 297.8 million actual versus a forecast of 294.43 million. Their earnings per share, or EPS, actually missed by quite a bit. We were expecting negative 0.083, came in at negative 0.17. And for the quarter, we were flat. And if we take a look just quarter over quarter, though, it was 301.1 million last quarter and then 297.8. So down slightly. Overall, pretty muted. And this was based on 8 analysts. And then, like I said, EPS, quite a big miss there as well. So a bit of a mixed bag overall. Not, stock was down about 2.5% today at the close. So overall, not, a pretty muted quarter, not a big reaction in either direction, but it was a bit more toward the negative side, in my opinion. The positives, though, they did have quite a few positives. They had gross margin improved to 62% from 58% year over year. They generated 51 million in operational cash flow, 34 million free cash flow, and they maintain a strong cash position at 329 million. 420 holiday sales, it also showed 20% increase in units sold, and adjusted EBITDA of 109 million, representing 37% of revenue. Their net loss was 33 million, increased from 23 million, which was the loss year over year, and revenue remained flat at 298 million, as I mentioned. They had operating expenses increase of 17% to 150 million, and their operating expenses as percentage of revenue increased to 50% from 43%. Also, there was a concern regarding the tax liabilities. So 691.5 million in tax liabilities spooked some analysts, but overall, like I said, it was a pretty muted quarter. The stock did get a hold rating, and their scale and margins are offset by persistent losses and tax burdens, and overall sentiment remains neutral. And optimism for federal reform is tempered by profitability, obviously, and regulatory challenges. So we could potentially see safe banking this year. In my opinion, I think there's a very, very high chance of that happening. And then if we get, rescheduling, removal of 280E, it's going to be night and day. That's why I don't really pay too much attention to these quarterly reports because, at the end of the day, there's still I think it's 75% of the illicit market is still accounting for all of the sales in the U.S. In Canada, I think it's something like 40% or something like that. But 75% still buy in the U.S. through the illicit market. That's a huge amount of growth there. There's the hemp industry. And, the second 280E goes away, all these numbers get skewed anyway. And then, once we get full-blown federal legalization, a lot of this, the prices are going to come down. There's going to be a lot more price compression, price wars. There's going to be a lot of competition from other people in the country, but also internationally as well, as it will more than likely be treated like alcohol and tobacco. And we'll see, a lot of LPs look at Canopy Growth. It's already selling under the Acreage brand and Canopy USA. So there's going to be a lot of competition. And as legalization rolls out, we're going to see these prices come down. So I don't really put too much, weight behind a lot of, overall, it was they're still maintaining great numbers, great margins. I just question how long that's going to last. And with Florida nowhere near seeing legalization happening, like the best cases in the next couple of years, it's going to be a long time before, we see the effects of this price compression and saturation in the market. But obviously, Trulieve continues to dominate Florida. If we take a look at the chart, not that bullish at the moment. We're still in a monthly downtrend. It could even be a monthly bear flag that's forming. So key support must hold there at 302. If we lose that, then it's a monthly bear flag, and we're still in a monthly downtrend. You can see here we have our lower high and lower low. So we're in a monthly downtrend. We're still very bearish on our weekly time frame here as well. We do have the 10-week moving average there at 403. I would expect us to come down and test that as support. And another major concern for me is the 50 weekly and the 100 weekly moving average is set to cross bearish. And when that happens, we can usually see another leg down. You can see whenever the shorter term, the 50 is below the longer term, the 100. When they cross, that's bullish, and the price was reacting to the upside. Then the opposite, it started to curl the other way. When the 50, the shorter term was above the longer term and they cross, that's bearish. And you can see here we've saw tons of downside, and we could see a little bit more downside as well as a result of that cross happening due to the fact that they're lagging indicators in terms of price, right? Simple moving averages, exponential moving average, they track the price, therefore they are lagging indicators. It's also going to be, I don't know how to gauge this. This would be, by the looks of this, it's probably going to be at least 4 months before we see, maybe 3 months before we see a golden cross there on the daily time frame. Look how far away the 50-day and the 200-day moving average was back here. You know, at the, I guess at the biggest point there of differentiation, and how far away they were at that sort of point in time. We were around June, and then by the time it crossed bullish, we were in October. So you're looking at several months. So yeah, I would say at least 3 months before we see a golden cross with the 50-day come through the 200-day moving average, similar to what happened here in October of 2023. And then as a result, we had a ton of upside. Then we just had a death cross not too long ago. Again, when the shorter term is above the longer term, and it's the 50 and the 200-day moving average, that's a death cross. That occurred back in December, and it's been an absolute bloodbath ever since. So we have a lot of work to do. We're still in a monthly downtrend. Still need to, top out on the monthly, form a higher low and then a higher high, and confirm a monthly uptrend before we're confident that this bear market is over. But all about that support, like I said, at $3.02. If we do not hold that, it could be very, very bad, as we could potentially be heading to monthly oversold as well in terms of the RSI. And then, like I said, you just take your measured move there from the high to the low, move it out to your 0.382 fib, and you're looking at a move down to around $1.57, and that's USD on the OTC, charting TCNNF. So we'll review Green Thumb earnings as well. They just came out. Wasn't that great either. And overall, it's kind of as expected, especially since Florida failed to legalize. We're seeing a lot of price compression and competition in that market. So we'll continue to monitor the space. The space is just, foaming at the mouth for some sort of reform at the moment, right? We know that Terrence Cole, the pick to lead the DEA, has said that he wants to make rescheduling a priority. So if we get rescheduling, personally, I think safer banking is the best chance that we have getting that done first. And it's also going to be low-hanging fruit, but also it's going to be something that the industry needs big time. I think there's a high chance that that gets done at some point in 2025. And then if we focus on rescheduling and we get rescheduling and that actually happens, we need something that is concrete though, right? We need, like, for example, like these numbers, they're still pretty good. Like overall, this is a great quarter for the company, but 62% gross margin, but the stock is down 2.5% at the close, right? Like it really, it doesn't matter what the numbers are, right? If they're bad or good, like nothing's going to take us out of this bear market right now in terms of earnings. We need something concrete, and what we need is either, in my opinion, safer banking, getting and that makes the most sense to me because they're going to want to get the position, get the Wall Street banks, the institutions position first. Nothing in the world happens without those big institutions and Wall Street banks. They'll get them positioned first, and then they'll see the floodgates open up and meaningful reform, right? But like I said, I'm very confident that there's not going to be anything other than one major catalyst for the entire sector that's going to knock us out of this bear market. We're starting to see a few outliers here and there start to gain some momentum, but the whole sector, I'm talking 80 to 90% of the sector at 52-week highs and all-time highs, that's not going to happen again. And we're not even going to be confident that this bear market is over and we're starting a new multi-year bull market until we have monthly uptrends across the sector. 80 to 90% of our names are in monthly uptrends, producers, retailers, ETFs, you name it. But we also need a concrete event, right? We need a catalyst, not just movement, not just progress. We need something concrete. I've said this a million times. We need either safer banking, in my opinion, or we need rescheduling. That's really the only two major things that I could see actually coming to fruition and actually being enacted, right? It's going to be a long time before Florida, right? We could potentially see it on the ballot again, but by the time even if it did get passed, it'd be probably another 6 to 12 months before it's actually go live. So it's going to take a long time. And I would say, it's probably going to be a 2026 story at this point, but either safer banking, an actual bill getting passed and signed into law, or rescheduling and that actually getting passed and 280E going away. Short of those two things, I can't really see this bear market ending, and we need something like that that's going to lift this entire sector up from the dumps. And it's been a brutal bear market, but there's a lot of positive catalysts on the horizon. We just have to be patient a little bit longer. Like Mr. Buffett says, the stock market is a mechanism from transferring wealth from the impatient to the patient. So you have to get clear on what we're doing here and call a spade, and we just have to call it for what it is. And unfortunately, this isn't get rich quick, right? All right, going in it there, let me know what you thought of the earnings in the comment section below. We'll continue the conversation there. It's Rod with Pow Group. Thanks again for joining us on the Pursuit of Wealth, and we'll catch you again on the next video.